But back to more corporate conversations. Apollo Hospitals is in focus. The company reported an inline set of numbers for the first quarter. The margin expanded, occupancy also improved year on year. But there was a slightly slower growth in terms of the average revenue per occupied bed. To talk more about this, we have with us Ms. Suneeta Reddy, MD of Apollo Hospitals. Ms. Reddy, great to have you with us. Thanks so much for joining in. I'm just going over the numbers for the benefit of our viewers. Your revenue is up a little over 15%. EBITDA has grown by nearly 33%, and margins have seen a big improvement, 13.3%. And obviously, the profitability is much better as well. Let me start with the margin, 13.3%, and the various levers that led you to this number. Is it sustainable? And then take us through the trends in terms of the average occupancies which have improved, and also the ARPOB trends that you project going ahead.
Okay, let's start with the margins. I think the margins are not only sustainable, but they will improve. If you look at healthcare, where we had 2,867 crores of revenue and 622 crores of EBITDA, clearly our margin there is 23.6%. And going forward, we will see improved margins because we are focusing on case mix and cost as a lever. So clearly, there is room for margin improvement. If you look at Apollo Health and Lifestyle, they had a revenue of 336 crores and a margin and 31 crores of EBITDA, margins at 9.8%. And here again, there is room for improvement because the diagnostics is growing by 15%, and that is a high margin business. Spectra, which is a daycare, 23%. And Cradles at 18%. So again, huge scope for margin improvement in this vertical. Apollo Healthco has, the digital business has grown by about 15%, and the offline stores have grown by 11%, leading to a margin of 7.6% in the offline, the pharmacy supply business, which is really growing. And digital is doing well and on track for break-even. So they keep 3 crores of EBITDA, and going forward, they've cut their losses from 150 crores last quarter to 115 crores. So net EBITDA of 23 crores.
Ms. Reddy, you're sounding very, very optimistic, and you've elaborated on how a lot of the other businesses, how they've really fired up, leading to this margin performance at a time when actually ARPOB has been a little on the softer side. So since you're so optimistic and you're saying there will be further improvement, can we get a rough sort of range that you may be targeting or keeping in mind? I mean, is it possible to say, look at even 15% by the end of the year? Or am I being too over-ambitious here with the number?
You're looking at blended margins, and I'm actually split it. But if you look at the hospital space, we're quite confident that there could be another 100 basis points improvement in margin in the next 4 quarters. So clearly, we are focusing on that. And with Apollo Healthco, they are, by cutting losses and really growing offline, they could look at better EBITDA performance, which they're on track for. And again, like I said, Apollo Health and Lifestyle is getting better. They're growing 3 verticals, which is the daycare, the cradle, and the diagnostics. And we're seeing above 20% growth in all of these verticals.
Ms. Reddy, hi, good morning. Prashant here. Good to see you back on the program. The average revenue per bed, ma'am, the growth was about 2% on a year-on-year basis. Could you sort of tell us, did that fall short of what you were expecting? Any reasons, and what should we expect here?
No, so if you look at the mix, 36% of our volume cases were surgical, contributing to 51% of our revenue, and the rest were medical cases. So the ARPOB did not increase, but going forward, electives should improve. It was a very sharp summer and election season. So, this was expected. So we had more medical cases and surgical cases.
Got it. Any guidance here for the full year, ma'am?
I think that you can expect to see a 7% improvement in ARPOB for the whole year.
Okay, 25 over 24. Apollo 24/7's GMV grew. It grew about, I think, 8% year on year, about 2% on a quarter-on-quarter basis.
Yes.
Again, what should we expect here?
So I think, it grew 9% year on year. And the focus is really reaching that number. It's at close to 700 crores. They are, by the end of next year, will be, each quarter they will be doing close to 1,200 crores. So they are on track. They have several lines of business that will continue to contribute to both revenue and margin.
Okay. Ms. Reddy, I mean, I don't know if this number is shared or not, but a breakup will help. I mean, the percentage of the revenue that comes in from the higher end surgeries, you said the mix was more on the medical cases side.
Yes.
So where are you now, and where do you see this number heading as, we see more advancement in medical science?
So about 54% of our revenue is coming from 36% volume of surgical. And this quarter we had a lot of medical cases. So going forward, a lot of elective surgeries are planned in the next quarter.
So right now, you said 54% of the revenue came in from the medical cases. Is that right?
Yeah, it came from the surgical. The balance came from medical. And it's usually higher from surgical, but because of the elections in summer, it was slightly muted there, which is why the ARPOB grew by only 10%.
Okay, and ARPOB you've guided for a 7% improvement over the rest of the year, right?
Yes.
Okay, just a word on Apollo HealthCo. I mean, here we're looking at an EBITDA of over 22 crores. The losses are a thing of the past. How do you expect the business to be, and what are you expecting on the digital side going forward?
Well, I think we're going to see very strong growth. They, of course, have 3 streams of revenue. The fourth, which is insurance broking, should start in Q3. So right now it's pharmacy online, it is teleconsults, and it is diagnostics. 3 of them are contributing. So the conversion of GMV to revenue is currently at 35.9%, and that will move to 44% next year. And when that happens, they do become profitable. So they are on the road to profitability.
Got it. Ma'am, we'll leave it there. Thank you very much for your time, and good luck to you and your team as you continue to execute on some of the numbers that you've laid out.